Out the story for us. Let's bring in Homayoun Falakshahi, oil and gas analyst at Kpler. Good to see you this morning. Look, the path of these increases was laid out back in April. Since then, as Dan has pointed out, oil prices have extended their rally beyond perhaps even the wildest expectations of the Secretary General, Mr. Barkindo. Given that, was this a missed opportunity to show the world that OPEC understands higher prices could kill this recovery?
Hi, good morning. Thanks for having me. No, I think as your colleague said, I mean, can you actually blame OPEC? If I were OPEC, I would rather have prices overshoot for even a short period of time, and then maybe come back to more normal level, what you would consider more normal levels, rather than have the contrary happening. So I think OPEC Plus has been doing the right thing. I think they've been doing the right thing for months now, and actually we believe that under Prince Abdulaziz's management, the fact that the meetings are taking place right now on a monthly basis really allows them to have that kind of flexibility. And just if you imagine that prices either crash or overshoot in the next 30 days, then they'd be able to actually react in a timely manner in less than 30 days. So I think that gives them the flexibility to do so. But let's not also forget that when you look at exports, the picture could be different. We've actually seen exports from the OPEC Plus group, excluding Iran and Venezuela, decreased by almost 400,000 barrels per day last month. And that's also due to stronger internal demand. And that's going to be even more accentuated by the fact that you get higher power generation needs in countries such as Saudi Arabia and the UAE. And part of their electricity is also comes from fuel oil and sometimes crude oil directly.
Homayoun, the point that Dan made was the Gulf economies have been badly hit by the pandemic, and it was a point that you reiterated, and that justifies perhaps the running hot for a while of oil prices. What then is the price at which you think OPEC may go back and reconsider the current agreement? Does it have to be $80 a barrel, $90 a barrel? Do we have to get to $100 a barrel before OPEC considers it's time to revisit?
I mean, if you look at it from a purely OPEC Plus side, obviously the higher prices, the better, because that means more revenues for your own state. Now, we're in a market where there's other factors to take into account. I think one of the biggest one that OPEC Plus will take into account when it comes to that question is when do we see higher capex, big capex increases, especially in the US and in the shale sector in the US. So the latest set of earnings and results from US shale companies have shown that so far they're showing extremely strong resilience, but also capital discipline. There's just a few of them, such as Continental Resources and Hess, have announced capex increases. But I think that as soon as you reach maybe $80, $90, or $100, then you'd have more of that. And so I think this is the point where OPEC Plus should say, okay, so maybe we've gone a bit too far now, and maybe we need the market to cool down a little bit so that we don't see that competition coming back very strongly.
Can we talk about the Iranian oil supply? Because the wobble that we witnessed on the markets early last month was down to some early expectations that we may have to contend with some of that Iranian oil supply coming into the broader market if sanctions are lifted. A lot of ifs and whens and buts around an Iranian nuclear oil deal. But what we've got on the markets is still, I guess, a level of concern in some quarters balanced against OPEC Plus saying there are no concerns about that Iranian oil supply. How do you judge it? What would be the implications of just how quickly Iran can bring that supply back into some of the key customer markets?
I think to an extent the response from OPEC Plus is sensible from yesterday, and that's because, okay, so it's true if there's a nuclear deal, the new nuclear deal that is signed, for sure you're going to see more Iranian barrels come back on the market. But at the same time, you're having energy demand, oil demand picking up very strongly. So we expect oil demand to boost by about 5 million barrels per day between now and the end of the year. Looking at Iranian supply, what we've seen so far since the month of January are export levels of around 720,000 barrels per day. So that's more than double what we've seen back in 2020 on average. And looking at the potential from when a new nuclear deal is going to be signed, we think that it's going to be 1.7 million barrels per day over the course of 6 to 9 months, of which you'd have about 1.4 million barrels per day of crude and about 300,000 barrels per day of condensate. So looking at that potential new supply, again, 1.7 million barrels per day over the course of 6 to 9 months, it's not going to come back overnight. We're not talking about 5 to 10 million barrels per day coming back overnight on the market. And the fact that at the same time you have that energy demand picking up, I think means that the market will probably be able to absorb this, given the fact that, again, even if you include all that new supply, you still have a big supply gap to fill that oil demand that is going to pick up between now and the end of the year, unless some other unexpected things happen again.
Fingers crossed at this point around the vaccine rollout, but that does take me to the United States and what the reaction might be there from this OPEC Plus decision. We've got a lot of shale producers in the Permian and beyond, also a place where they're witnessing what the vaccine rollout looks like firsthand. What do you think those shale producers are likely to do at this point with the higher price and this OPEC decision?
We're in a market which works in cycles, and normally companies, when prices go down, they say, okay, so next time prices go up, we maintain our capital discipline, and then the next time prices go up, they start overspending again. So that is going to be the key question here for U.S. shale companies. I think for now, investors have got the keys, and that's because a lot of, for example, private equity companies are trying to exit the sector, or at least are not interested in it anymore. So I think that it's going to be interesting to see the reaction in the equities as soon as we start seeing new capital expenditure increases being announced. And I think that is going to be one of the keys to see how much U.S. supply is going to come back this year and next year. So far this year in 2021, we're relatively conservative on new U.S. supply compared to last year. We see about 300 KBD increase over the year, although that would be 1 million barrels per day from December to December from the U.S. But that supply, again, is going to be just part of the supply that is going to be filling that demand gap as Iran and OPEC Plus also will take a role in this.
We've got to leave it there. Thank you very much for joining us with your perspective. Homayoun Falakshahi, oil and gas analyst at Kpler. We've got some news crossing from Amazon. Exciting big event for the diary, Jeff. Prime Day.